There is no case for tightening monetary policy in Canada. That's according to analysts after the BOC's policy announcement. Joining me down the line to discuss is Benjamin Reitzes. Now, Benjamin, the Bank of Canada's decision to maintain rates follows gloomy data, which some experts say reflects exporters' continuing struggles to cope with a high Canadian dollar and uncertain foreign markets. Is this in line with your estimations?
Definitely. And, we've been waiting essentially more for the U.S. to pick up than anybody else, but we've been waiting for the Canadian economy to rotate away from household demand and housing in particular towards export-driven growth and investment-driven growth, and we just haven't seen it yet. That's something the Bank of Canada noted in a statement, and they're waiting for that. The Canadian economy has been driven largely over the past few years. Its outperformance has been driven by strength in household spending, and we even saw that in the second quarter. And housing as well has been particularly strong in Canada, but that sector has started to cool, and we really can't count on that to drive growth moving forward. And so we're waiting. The Bank of Canada is waiting. Pretty much everybody's waiting for the U.S. economy to pick up sufficiently to pull Canadian growth higher through demand for Canadian exports.
There remains disparity in the attitude towards tapering, as some associate with risk opposed to a strengthening economy. But with regards to Canada, could tapering sooner rather than later be the economic boost the country needs?
Well, we're kind of in the latter camp there. Tapering would entail a stronger U.S. economy. The Fed's not going to cut slow their stimulus unless the U.S. economy is picking up. So tapering is a good thing at the end of the day, even if it causes some financial market volatility in the meantime. And from Canada's perspective, it is a positive. It's doing some of the work the Bank of Canada would like, or so it's having the impact the Bank of Canada would like it to have. A weaker Canadian dollar, that's good for the Canadian economy. That's good for exporters. That helps that transition towards export-driven growth that the Bank of Canada wants to see. It's also pushing interest rates higher, and mortgage rates in particular higher, both in the U.S. and in Canada as well. And again, that's what the Bank of Canada wants to see. There are concerns about household debt in Canada, and if mortgage rates push higher, that should limit home price growth and the housing sector in general, and ensure that household debts don't get out of hand. So those are both things the Bank of Canada wants to see, and tapering is contributing to that. So tapering, well, assuming the Fed goes ahead in September, that would definitely be, I think, a positive for Canada. And the sooner they get away from QE, that implies the U.S. economy is stronger, and that's good for Canada. So the more tapering, the better at the end of the day, assuming it's driven by a stronger U.S. economy.
The federal government's commitment to eliminating its deficit for 2015, coupled with existing austerity, is casting doubt for some as to whether recent increases in public expenditure are sustainable enough to support growth. What are your thoughts, Benjamin?
We have federal spending, or government spending, really rising at about 1%, give or take, over the next year or so, and that's really been the pace it's been rising at. It hasn't been particularly strong. It has added to growth a little bit, but we don't see government spending, federal or provincially, adding all that much to growth. They are consolidating. I wouldn't call it austerity in Canada, but the federal government and most of the provinces are working towards eliminating their deficits, and that is going to keep some restraint on spending and government spending and economic growth as a whole.
The Canadian dollar showed some resilience over its counterparts during recent outflows, but what is your outlook for the CAD moving forward? We
have the Canadian dollar weakening over into next year. As the Fed tapers, the Canadian dollar weakens, and that's more a story of U.S. dollar strength. We have the U.S. dollar strengthening pretty much across the board, and so Canadian dollar weakness is part of that. However, once the Federal Reserve is done tapering, likely sometime in the first half of next year, somewhere in the second quarter likely, or around mid-year, the markets will shift and they'll focus towards more on interest rate differentials as opposed to QE, the end of QE and tapering. And those interest rate differentials should benefit Canada. So as we move towards the middle of next year, the Canadian dollar should look a little more favorable to foreign investors as the Bank of Canada is expected to raise rates before the Federal Reserve, and that should help Canada appreciate a little bit through the second half of 2014.
Benjamin, thank you so much for your time today. Viewers, that's all from me for the moment, but later I'll be bringing you the latest from the BOE and ECB meetings, so you don't want to miss that. Goodbye for now.